To build anything that truly lasts, it takes time.
Well, let me also welcome on board Anshul Saigal. Anshul, hi, afternoon. Good to be speaking with you. Do you also think, Anshul, that it's going to be reliance and more of financials to take us to the next leap and perhaps an all-time high, given that at an index level, we're only about 2% away from that mark?
Afternoon, Aisha. Always a pleasure to speak with you. Yes, banks, if you, it's important to give a little bit of a context on banks in particular. And, these opportunities play out in waves. So if you go back to the year 2012-13, we were at a cycle, at the cusp of a cycle where corporate banks were starting to face trouble because NPAs were starting to rise. And that situation carried on till about 2018 and 19. And we saw what happened in corporate banks. A bank like an ICICI bank traded at 0.7, 0.8 times book. PSU banks, many of them traded at 0.2, 0.3 times book. And it is at that time that the NPA cycle peaked off, and as a result, profitability bottomed. And when that cycle reversed, the wave also reversed in favor of the banking sector, particularly the corporate banking sector. And we saw what happened. Many of the PSU banks went up 6, 7 times, 8 times as a result of that. Of course, in the last 1.5 years, there's been a consolidation here. And in the private sector banks, there has been a consolidation over the last 3, 4 years, which is now starting to break out, particularly the retail-oriented private sector banks. What we witness now is a situation where NBFCs in particular had been kind of tempered because of action at the regulatory front. And if you look at the slew of news items and also regulator initiatives, we are quite clear that the regulator wants to start the NBFCs a breakout in a sense, and they want to really see NBFCs go out and lend. We anticipate that the next wave will be in NBFCs, and as your previous speaker rightly mentioned, housing finance, NBFCs, general lenders, all of those should be quite strong as we move ahead in this sort of wave.
I guess we'll get a lot more food for thought. The cabinet briefing is currently on, and let's cut across to Ashwini Vaishnaw speaking.
आत्मनिर्भर बनने के लिए जो टेक्नोलॉजीज चाहिए वो सारे सेक्टर्स को इसमें इंक्लूड किया गया है। इसका स्ट्रक्चर इस तरह से होगा, गवर्नमेंट ऑफ इंडिया ने एएनआरएफ को फंड्स दिए, 1 लाख करोड़ रुपीस के फंड्स दिए। ये एक 50 ईयर इंटरेस्ट फ्री लोन है। एएनआरएफ का जो स्पेशल पर्पस फंड बनेगा वो सेकेंड लेवल फंड मैनेजर्स को कंसेशनल रेट पे फंडिंग करेंगे। सेकेंड लेवल फंड मैनेजर्स में बहुत सारे हमारे जो अभी एग्जिस्टिंग फंड मैनेजर्स हैं और इसके अलावा भी नए फंड मैनेजर्स जो डेवलप करेंगे, उन सबके पास ये फंड जाएगा। वो लोग नीचे प्रोजेक्ट को असेस करके, अप्रेज करके, उसकी वेटिंग करके, प्रोजेक्ट बाय प्रोजेक्ट सिलेक्शन करके आगे फंडिंग करेंगे। ये जो फंडिंग होगी वो सपोर्ट इक्विटी और डेट दोनों तरह का होगा। जैसे वीसी फंडिंग होती है, वेंचर कैपिटल फंडिंग होती है, वैसे ही इसमें वीसी और डेट का कॉम्बिनेशन रहेगा। सारे सेक्टर्स जो स्पेसिफिकली डिफाइंड है, उन सेक्टर्स में ये फंडिंग जाएगी। बहुत अच्छा स्ट्रक्चर है ये, और ऐसा स्ट्रक्चर दुनिया में बहुत सारी जगह सक्सेसफुल हुआ है, और इंडस्ट्री के साथ डिटेल डिस्कशन होने के बाद में ये स्ट्रक्चर बना है। गवर्नेंस के लिए बहुत एक ट्रांसपेरेंट मैकेनिज्म बनाया जाएगा। एक तो ANRF की गवर्निंग बॉडी रहेगी, उसकी एग्जीक्यूटिव काउंसिल रहेगी, ये ब्रॉड पॉलिसी डिसीजंस के लिए। उसके बाद में डे टू डे जो डिसीजंस होंगे वो एम्पावर्ड ग्रुप ऑफ सेक्रेटरीज, इसमें जिस सेक्टर का प्रोजेक्ट है उस सेक्टर के सेक्रेटरी भी शामिल होंगे। मान लो एनर्जी ट्रांजिशन का क्लाइमेट एक्शन से रिलेटेड है तो उसमें MNRE के सेक्रेटरी शामिल होंगे। मान लो AI से रिलेटेड है तो मेटी के सेक्रेटरी भी शामिल होंगे। मान लो बायो फार्मा है तो उसमें हेल्थ सेक्रेटरी और फार्मास्यूटिकल के सेक्रेटरी भी उसमें रहेंगे। नीचे इन्वेस्टमेंट कमेटी बनेगी जो कि जिस तरह से वेंचर कैपिटल इंडस्ट्री में इन्वेस्टमेंट कमेटी काम करती है प्रोजेक्ट को अप्रेज करने के लिए, वो उसी मेथड से काम करेगी। दिस इज अ वेरी गुड, वेरी ट्रांसपेरेंट एंड अ वेरी डिटेल्ड स्ट्रक्चर which is based on the consultations with industry, consultations with many other governments who have done similar structures in the past.
Okay, very interesting announcements coming in there that there will be an ELI or employment linked incentive scheme which the government has just announced worth about 1 lakh crore rupees, and there is a nod for research development as well as an innovation scheme. But I think from a market perspective is that the manufacturing sector is going to be the one which is going to be in focus under the ELI scheme, which is an employment linked incentive scheme that's just got announced. The scheme, of course, is going to be applicable to all sectors wherein the focus is going to be manufacturing. And Anshul, we've seen that, the market has truly recognized the theme of manufacturing ever since the government did begin talking about an Atmanirbhar Bharat. Within manufacturing, from an investment perspective, where is it that you still scout for opportunities?
Aisha, in manufacturing, we have seen a dearth of capacity creation over the last, let's say, the previous decade, that is between 2010 to 2020. There is a lot of catch up to happen. Also, there is that China plus one theme which is likely to play out going forward. As a result, the world is going to move its manufacturing to India in great measure. Take both these things together, exporters out of India of manufactured goods, as also within the country, whether it is electronics, it is chemicals, it is even capital goods, which will be a play on manufacturing. All of these segments in the market will see significant tailwinds. Just to give you an anecdote, I was speaking to a manpower management company recently, and they mentioned to me that about a year back, the total manpower capacity that they had for manufacturing was about 5,000. That number has gone up to 75,000 today. And in the next 2 years, they anticipate that number will go to 1 million. So that is the kind of tailwind that manufacturing is witnessing already, and it is likely to witness as we move ahead. This is the sunrise sector of the future. This is what IT was in the 2000s, and tremendous amounts of wealth will be created in this segment.
Stocks that come to your mind or companies wherein you see immense growth visibility?
Take auto components. Auto components, there is going to be tremendous visibility, and also there are auto OEMs also, they will witness tremendous tailwinds. Aside from this, take bearing companies, take chemical, particular segments within chemicals, say fluorination chemistry. That's where you'll see significant tailwinds. So many of these segments, also CDMO is a space where we will see tremendous tailwinds. The market is as big as $150 billion. India does only $3 to $4 billion of that. Most of that manufacturing happens in China. Say 2 or 3% of that move away from China and towards India, and we will see a doubling of the market. So these are some segments where we will see tremendous opportunity, and we are already seeing that. Speak to companies, and they'll tell you that many of these companies that they'll double revenues in the next 3 years. So much is happening in this space.
Lot much is happening within the sectors that Anshul just highlighted. Case in point being the auto ancillary companies, and well, of course, today we have seen select auto companies doing well. Case in point being Gabriel India, after the company announced a restructuring of their businesses, wherein some of the other entities will now get merged into the listed entity of Gabriel India, now expanding the product portfolio from just one product to multiple products coming in for Gabriel India, and the analysts believe that from day one itself, this will be an EPS accretive restructuring. Along with that, the EPS accretion can be as high as 41%. So indeed, the stock is already locked at a 20% upper circuit. But Shivangi, within the auto ancillary space, any stock that is looking good to you, because the OEMs are absolutely doing nothing of late. But yes, a lot of action within the auto ancillary space. Any stock that comes on the top of your mind?
Absolutely, Shrishti. When I talk about auto space, there has been some bit of revival over here. But what major trends are suggesting that there is still a lot of unwinding left to be happen in the heavyweights, which is why the overall sector is not really changing gears for the higher zones. So I would suggest a little wait and watch over here. Nifty Auto has been consolidating and trying to move, but lack of follow up is clearly missing. Lack of follow up is clearly seen in this entire sector, which is kind of making it a little, wait and pause for the moment. So I would suggest we could shift focus to banking and non-banking stocks, non-banking financial stocks for that matter.
Okay, that's the take coming in right now. And where is it that you're finding opportunities? And it seems to be a consensus call. It's NBFCs and banks. That's the way really to go. Let's take a very quick break. When we come back, of course, we're going to be taking the closing trading ideas as well. Less than 15 minutes to go. Let's see how we pan out for the day.
And we have a breaking news coming in on India-US trade talks, wherein the India trade team has extended its stay by one more day. Let's go across to my colleague Sumita, who is here with more details on this one. Sumita, tell us the latest that you're picking up.
Absolutely, Srishti. This trade team that's led by India's chief negotiator, 6th and 27th, they extended their stay beyond that time period. And now we're given to understand from government sources that the trade team, which is in the United States in Washington to negotiate with the United States trade team and the Commerce Ministry officials, well, that has extended its stay by one more day. In fact, we're also given to understand from government sources that India-US talks, they remain deadlocked as New Delhi is resisting lowering of tariffs with respect to its very, very sensitive agri sector, dairy sector, and GM crops, genetically modified crops. Remember, government sources last week also indicated, and they told ET Now exclusively, that that is one segment that has not been touched before with respect to any deals that we've struck with other countries. So, of course, India maintaining a firm stance with respect to this particular sector. Meanwhile, India is insisting on a competitive edge that it needs to have for its own domestic industry. It is also asking for concessions related to labor-intensive sectors that includes handicrafts, gems and jewelry, and related sectors. And in fact, they are yet to come to an agreement so far as an interim trade deal is concerned. So that's the latest that we're picking up as far as negotiations between the two sides are concerned.
Right, we'll leave it at that. Sumita, thanks for all those details. Anshul, wanted to get your thoughts in. I know that, there is that fast approaching tariff deadline with the US and the extension of 3 months comes to a close. But how critical do you think, from an India standpoint, would be the tariff negotiations for the market rally to continue? Would it have any bearing to begin with?
Aisha, this has various facets to it. One is, of course, the immediate benefit in terms of earnings for Indian companies, and that will happen sector by sector. For instance, in textiles, there can be significant benefits as a result of the trade deal, but in capital goods, unlikely, because there isn't really much that we can trade on that aspect. So there will be a sector by sector benefit that India will see because of the trade deal. But there is another layer to the trade deal, which is that there is capital flows that happen because of geopolitical moves. And if the trade deal, by and large, is seen as beneficial to India and adversarial towards China, then clearly that will be a signal that even flows should move towards India to some extent at the cost of China. So on flows, this can be a big signal. And by and large, India is a very small sort of, I mean, on India's GDP, the trade with America is very small, and there is only room for increase over there. So, in our judgment, the tariffs are and the deal, the trade deal, are likely to be beneficial for the country by and large. That's the way we view this negotiation at the moment.
Shivangi, let's get in your stock ideas as well. Less than 10 minutes to go before we wind up.
Absolutely. So talking about the stock ideas, we are seeing that some of the smaller banking names and the NBFC space are obviously outperforming in the entire broader market. My preferred pick would be Federal Bank, which has shown buying interest from the last around about 18 weeks. Support-based buying has been quite strong here, but the consolidation breakout in today's session is confirming the uptrend. It has surpassed its previous hurdle zones of 215 levels and very comfortably trading and closing above the same. Now there has been interesting data points here, as in the rollover has been quite positive with long build up, and it has been holding well above its key exponential moving averages as well. So Federal Bank is definitely a one on the radar with a target of 227 and a stop loss of 214 levels. And the second pick on my radar would be Loris Labs. We've seen that this entire space has been doing fairly stable and well in the last 2 months. And recently, Loris Labs has given a breakout on the monthly frame with follow-up buying seen here. From the last two trading sessions, volumes have been quite remarkable over here, and this stock is one which has been resilient despite the market weakness and volatility in between as well. So definitely a strong name with looking good for a potential targets of 770 levels with a stop loss of 730.
So those are the top bets coming in from Shivangi. Let's watch out for Federal Bank as well as Loris Lab that Shivangi just highlighted. But Anshul, just wanted to have your take on a stock of BEL, because of late we have seen, especially for the past 2 months, there are so many new order inflows coming in for BEL. Today the stock is at an all-time high. But Anshul, the other concern is with respect to the valuations and the kind of run-up that these stocks have already seen. But any take specifically on BEL, and how do you see the whole defense pack right now? Are you also concerned with respect to the valuations?
Hi, Srishti. Just as an aside, in 2014, January, I tweeted saying that defense and gold should be seen as a strategic hedge to any portfolio. And there should be some allocation in both these segments in all portfolios because of geopolitical tensions that were really simmering at that time. And you really, the crystal ball gaze has worked very well because it is these two segments which have really outperformed the markets since then. Now we are at a stage where most of the valuation upside is in the price. And one has to be kind of cautious at this time. The easy money that was on the table around that time has mostly been made. Many of these defense companies trade at 40, 50, 60 times price to earnings. And that really builds in future growth potential for these companies. The shipyards, for instance, they are trading at astronomical valuations. In our judgment, this is not a time to be as ebullient as you could have been, say, a year and a half back. But still, some allocation to defense should be in the portfolios because this is an unnerving time. We are really going to be in a period of nervousness as regards geopolitics over the next 2 3 years. And this is one segment which will act as a hedge to the portfolio. So valuations tight, but on a stock specific basis, some opportunities still remain in this space.
And what's your preferred list of names there, Anshul?
Some of the companies, Aisha, will be names which have conglomerate nature. Some companies which have auto component, segments also within the business, as also a defense component. And at some point in the future, these businesses will be demerged. And so valuations at the moment are building in the auto component weakness, not so much the defense strength. And that should really help going forward. And then there are certain smaller companies where the base is so small that the upside in earnings, particularly on revenues, can be as much as 50% CAGR for the ensuing future. And if that does play out, then valuations really at this time don't look too expensive. But as I said, these will be stock specific opportunities, not really a sector specific approach. The sector, by and large, is trading at full valuation.
All right, Anshul, with this, would like to thank you for taking the time out and speaking with us this afternoon. And